Hello, everyone. Hopefully, you're having a good day. My name's Andy. My channel's Finding Value. We're going to go over gold and silver, do some technical analysis. I'm going to go over one thing. It's called sector rotation, how money moves from sector to sector based off the economic and stock market cycles. I'm going to go through copper and gold, some of those ratios and whatnot, and show you where we're at there, and then go into the charts and look at the technicals of some of the ETFs that we look at, like GDX, GDXJ, and whatnot. So here we go. It's gold and silver. So here's the sector rotation. I just kind of wanted to touch on this. The red is the market cycle, like stock market cycle. The blue line is the economy's cycle. And they just offset. And stocks, they typically do very well before the economy starts to heat up. And the economy is just slightly lagged behind the real estate cycle. So the real estate cycle might be somewhere in the middle of this. Between these two, it would be like somewhere in here, where we go into an expansionary phase, the economy comes right behind it, and then you get all these rotations, sector rotations to occur. And where I'm proposing that we're at pretty close is I think we're pretty close to a market top, and I think we're pretty close to a early recovery in the economy at some point. And where I think we should probably be looking at is we're transitioning from technology, industrials, and basic materials into a market that's basic materials, energy, and staples. So I think energy, we just saw that first kind of ramp up. We're trying to break through its pattern. It broke through, and we're back testing right now. So I think energy is going to be a good spot. I think staples, healthcare, eventually, but basic materials, energy, and staples are the spot, according to this, that we should be in for sector rotation. And I think we're real close to a market top for the stock market. And the economy would be somewhere in this range in here. Looking at the Dow to gold ratio, Dow has been outperforming gold in the short term. So we're probably going to come up and eventually peak and then head lower. And that's what I'm looking for at some point. We haven't hit that point yet. And here's an interpretation. I just kind of want to go over the copper to gold ratio. Gold's the most widely recognized safe haven asset among investors. Therefore, during times of economic and geopolitical distress, it generally tends to perform well, making it a leading indicator of fear. Copper is the exact opposite. Because it is a key industrial metal that is used globally in a wide range of industrial applications, it performs strongly when the global economy is firing on all cylinders. This makes it a leading indicator of global economic health and has led it to being commonly called Dr. Copper. So looking at the copper to gold ratio, and what this means is that when gold is outperforming, or when copper is outperforming gold, like we see right here from 1970, we just broke this massive downtrend pattern here to the upside, where copper could potentially outperform gold. It means that the economy may be a little bit stronger, and we might see a large move in the copper to gold ratio. It happened in the early 2000 to 2008, and during that commodity boom. And in the 70s, it actually declined quite rapidly. It seemed like it was a very expensive time for copper, at least for the ratio. But that's tough to say because we were on a gold standard, and they were cheating on how much money they were printing, and gold came out of the gates and accounted for all that money. So we'll see what happens over here on the right-hand side. But it looks like copper broke out of its downtrend and could potentially move higher, the copper to gold ratio. This is zoomed in on the right-hand side. You can see this clear break here as we're just chopping sideways with the ratio. The M2 money supply growth versus inflation. And the black, dark, the black line is M2 money supply, inflation's the red line. So you can see that this went up, and then it was delayed a few years, and then inflation went up. And you can see this M2 cycle back and forth. In 1996, they changed some of the data where they were started to manipulate the CPI inflation numbers. And you can see it kind of move a little bit, like it's almost suppressed more over time. That's because they're starting to manipulate with the inflation numbers. Also, we have inflation. The deflation guys, we don't have deflation. We have inflation. I think what's going on in the near term is people are getting worried about the COVID variant and what ramifications, implications and ramifications that potentially could have on the markets, the COVID variant. So we're seeing a lot of scared people, but we do have inflation. In fact, the inflation rate is higher than we've seen in previous years. GDX, you can see kind of where some support is, and that's kind of around $29, $30, and we still could move a little bit lower before hitting that support. So we are selling off. GDXJ, I just took these couple of lines here. We could fall quite a bit further down without hitting major support. There's some support through here. I mean, there is some support underneath all through here, but we are selling off. It's in a downtrend. SILJ, I would say, is at its support right now. Hopefully it'll hold and we don't just blow down. And there is a possibility that we could spike lower with a scare if they start closing something down because of the COVID variant. Endeavor Silver Corporation, we came up in this ascending wedge pattern, broke to the downside, and we're still pulling back. We're in a consolidation pullback mode at the moment. And it's a quite substantial pullback at the moment. It's definitely not feeling good in the portfolio. Mag Silver, it broke to the downside. We'll see where this thing starts to calm down, but we're still in pullback mode. Franco-Nevada, I always like looking at this one. Again, we're in a strong pullback mode for that. People are selling it off. People are afraid. And Wheaton Precious Metals is selling off a little bit as well. That one's still in its uptrend. Here's a look at Tooten Resources, one of my favorite small royalty companies. Again, we're pulling on back. We're kind of just moving all over the place, chopping sideways through here quite dramatically. Sandstorm Gold looks like it's not getting any sort of rest. It's just straight sell-off. A lot of sellers here just selling it off. Looks like we may have some support down here at a little bit above $6. We'll see if that holds. But that's kind of the overall market. I mean, it's been pulling back for gold and silver. We are in an inflationary period. It's not deflation. I think people are afraid of deflation, the COVID variant, and the ramifications of what happens with the COVID variant. So if we start seeing COVID spike, are we going to shut things down? I don't know. My approach has been just to ride through it, and that's kind of what I've decided, rather than trying to jump in, jump out, and do all this stuff. And I mean, the market conditions are there for inflation. Now, COVID, that could easily disrupt all of it. It very well could. So then the question is, do you want to be in the stocks or do you want to be out of them with some cash in case some like a COVID variant, especially in the winter, because that's when really things I think will start to hit. Do you want to build more cash? I'm building more cash right now just for a better buying opportunity. And when that opportunity comes, I'm going to take advantage of it. But if I have money in it, I'm just riding it and holding on. If you guys like this content, give me a thumbs up. Thanks for listening. This is Finding Value.